Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Tuesday, February 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up a penny and a quarter at 4.90. March soybeans were down 3 at 10.55 and a quarter, and March Chicago wheat was down 7 and a quarter at 5.59 and a half. This morning, we had an export sales announcement of 132,000 metric tons of corn to South Korea. This is for 24-25. Yesterday afternoon, December crush came out 217.7 million bushels. That was up 6.6% from year ago levels. Also, winter wheat ratings were released. Kansas up 3% to 50% in the good excellent category. Oklahoma, on the other hand, dropped 5% to 40% good to excellent, and Texas was also down 5% at 37% for the good to excellent category. We are through one of 19 settlements on our crop insurance discovery period for spring crop insurance price. Corn, first settlement, 465 and a quarter. And soybeans 1063 and a quarter. A lot of news there yesterday afternoon. Mexico and Canada tariffs suspended 30 days. So a little bit of movement there. Nice to see. That was pretty quick. Obviously, negotiating taking place there. China's up next. They announced overnight, some retaliatory tariffs set to take place the 10th. 15% on about 5 billion of energy imports, crude oil, liquid LNG, coal, to name a few. Also slapped a 10% tariff on U.S. Oil and ag equipment, as well as some language regarding tungsten export controls, which I believe are about the chips and all that kind of deal. So certainly they're retaliating or using narratives there. So it'll be interesting to see. They are on holiday currently. So I know Trump's supposed to talk to Xi here within the next 24 hours, and we'll be looking for news out of there. So guys, with that being said, lots to digest. Dustin, maybe kick us off here this morning, and then we'll throw it around the room.
Yeah, so, I guess, the answer is nobody really knows how these trade wars are going to resolve themselves. We have a 30-day extension before the trade tariffs are going to go back and forth, after yesterday. So that was huge, especially for Mexico. I think that the market obviously turned around when, you just go into that night session, just go online to like an X, Twitter feed for grain. And it was just, wind was out of their sails, the market's going lower, funds are long and wrong, and then yet we finished higher after the first day of trade tariffs. But I think that's kind of a reminder of just how unexpected things could end up here in the end. We don't know how the U.S.-China tariff is going to go, but we do have precedents that there was a trade deal 1.0 back in 2020, that it really took a while before China really adhered to it, late 2020 and into 2021. But that might still be the result of this. We're still in the arms race for AI. And if there's any sort of way for China to kind of extend this rush to the red light, they may take it. Or they could dig their heels in and we see, our prices will suffer as a result. It's really kind of a volatile outcome that we would expect, if anything. I would say that more likely to see a lot of volatility than stability. So that's what we're kind of trying to prepare for. We are one of 19 trading days for that spring crop insurance price, as you mentioned. And I think as we go through the month, every day that we can tick through with a decent spring average for corn and beans combined, there is a potential for risk just to go down, just because we can go up in policies to start covering that as part of our plan B floor. So.
Yeah, no, absolutely. Justin, what's on your mind this morning?
Yeah, I mean, nothing different really. I think it's just we're chasing headlines and it's choppy. I think the volatility is going to stay here. Getting pressured to, sell big breaks and buy big rallies, I think is going to be a painful experience for the next 30 to 60 days. So I kind of expect this to kind of be a norm for a little bit until we kind of figure out where things are going to sit. I mean, at the end of the day, the news is, trying to make everything we're doing is like, being super stupid, and we're cutting a lot of deals. We're digging into a lot of things at Doge, which I think is really positive for our economy overall. Finding a lot of wasted dollars, and it's upsetting a lot of people. So it's probably doing something good. So no, but it's going to create a lot of volatility. So I think you got to have areas that you're willing to sell or willing to buy, and kind of stick to them and not do knee-jerk reactions. So I think we've got lots of resting orders in, slightly above the market, which I hope we hit. We're kind of getting into that crop insurance time frame. So next 30 days will be really meaningful for, I think, taking big boulders of risk off the table and kind of setting hopefully a good stage for 2025 marketing. So that's kind of my main goal.
Well, we were talking outside the show over the weekend, and I thought you made a good point. And as if you were to set a real solid, we'll call it a solid flooring for D's corn for new crop pricing through crop insurance, you thought maybe that was one angle to get the corn acres that people are talking about, that you could buy up a Cadillac policy and it might entice people to do so.
Yeah, there's obviously going to be a lot of debate on number of corn acres. The number 95 is thrown around pretty easily among a lot of people. I think that's a lot of it's because that's what we need. If you look at just balance sheets and kind of what acres need to be to make things more in balance between corn and bean carryouts, 95 plus on corn. So it's easy just to throw that out there. We'll see when we actually get there. I do think, because people have relatively higher APHs, maybe more confidence in growing a bigger corn crop, that it's easy to pencil down a record corn crop for some growers and just say, all I gotta do is grow a record, and then these prices make sense. Where they might not be as confident on beans. Like, as silly as that might sound, I think it's kind of human nature. When you need something to happen, it's which way is the easiest way to make it make sense in your head. So I do think there'll be some of that. If there's generally a lot of friendliness in corn, and you can buy some of these policies and have Farm Bill, I could see corn acres, certainly going up. At the end of the day, you still have to borrow the money. You still have to spend the money. Inputs have been very sticky or even trending higher. Tariffs, if anything, are probably, going to make the situation a little more difficult. So I don't think it's a no-brainer. I think corn does need more acres. I think it's probably going to try to stay supported relative to beans going through crop insurance timeframe. And I think that's where the ratio really matters, is what that ratio is for crop insurance, how that's set. So it really can't afford to have, in my opinion, if corn was to lose a bunch to soybeans in the month of February, I think it's really hard to get those acres back without a large flat price rally. So, maybe that's kind of a little bit of word salad there, but I think this month of February is really important to determine those acres and how that crop insurance plays out.
Right. And we've talked about it a lot. I mean, you get through half of the discovery period. So from 8 days from now or so, it's real difficult to change that price. So it's coming quick.
Yeah, certainly, by the end of next week. And that's why it's so interesting that, all this stuff's happening at the same time, so I do think option volatility is probably too low for the amount of risks and unknowns out there right now.
Mm-hmm.
So I think it's just kind of sticking to what we've been, trying to preach here for quite a long time, especially, even on this show, but just really looking at all the different tools and trying to figure out, hey, if you can make corn work and you can get the right crop insurance policy, you've got the right APH data, you can use the right tools, like you just got to look at those and figure out what your advantage is. So somebody that's in a high producing county for corn, has a lot of storage, has irrigation, whatever the case may be, might have most likely has a different opportunity to plant more or less, corn or soybeans than somebody that doesn't have those things. So you got to really look at your farm and just think about that.
Yeah, well, and it's a great point that we've also started to see that some of these PLC ARC decisions are changing as well. So just the ability to do some of that analysis is going to be paramount to making sure you set yourself up right. Justin, before we transition here real quick, I noticed big open interest jumps in beans and oil yesterday, 10,000 for the beans and actually 10,000 also for the oil, which that's pretty significant in terms of open interest for the oil complex.
Yeah, I talked about oil a lot on this show.
Yeah.
We were up 150 points or penny and a half, however you want to look at it, on the open yesterday, when we had tariffs with Canada, and started to fade, and then as Trudeau came out and said they also extending 30 days, now oil's down 150, so it's having massive swings. Oil is probably that, I kind of said yesterday, kind of canary in the coal mine or the bellwether there on those trade deals, because so much canola, is imported against soybean oil, in biodiesel and usage here in the U.S. So that was kind of an indicator, that the deal was going to get done there. So you kind of saw soybean oil really breaking first before a lot of the announcements came out. Now we're seeing, energy prices obviously today with the China announcement. So, if crude oil starts to rally for some reason, maybe the talks went good. So,
right.
It's kind of, obviously the information is getting out faster than we can get it, even though it's pretty instant on X. Obviously other people know about it first. So,
yeah, well, it's crazy times here. Ryland, we got a couple minutes. Open borders yesterday for Mexico certainly slowed down feeders, and hogs are pretty well married to, what's going on with this Mexican tariff talk here. So what are your thoughts?
Yeah, there's no question. I mean, it did kind of feel like the open border was really what started to kind of quash the early rally, so we did see some liquidation. I mean, I think just in general, you had a risk off trade in a lot of different markets, but especially on the live cattle side, where something fundamental is starting to show up that could actually weaken prices further. So the feeders definitely kind of took it on the chin. Open interest was down about 4,700 contracts in the live side and 2,100 on the feeder side. So, it was happening. Whether we see some more of that or not, it's yet to be seen, but we know that the trade is really heavily long, especially record long in both places here. So I think that's a big risk if we start seeing the fundamentals start to shift a little bit. So we'll see. We haven't really seen much on the cash side of the market. We haven't seen Packers post any considerable bids yet, but I think they're likely to try to take advantage of the weakness on the board this week. But I'd expect a pretty volatile trade. So, just kind of watching to see how that shapes up. But yeah, on the hog side of things, April's close limit down, so we're going to have expanded limits there. Of $6. So it just kind of puts that into perspective. I mean, you pretty much took back 7 days worth of gains in April in just 2. So, I mean, obviously there's going to be a lot of concerns with the potential threat of tariffs, trade wars, these things getting pushed out. Maybe some of the specs are going to start to feel like may want to just sit on the sidelines for a while to avoid it. There was no cash data yesterday that was posted. Everybody was just kind of staring at cutout just being down 94 and a limit down board. So obviously the headline trade is really going to be kind of the guiding force, I think, just, for a little while here. So we'll see what happens. The old adage is you typically fade the the expanded limits, but I don't know if that's going to be the case today. So we'll just see how it shapes up. I mean, just kind of taking all the headline trade in stride.
Very good. Appreciate the update there, Ryland. Wanted to point out as well, and we've talked about it and alluded to it a number of times during the show, but running a great special here through April 1st, for a crop insurance analysis and how that all, jumbles in and works with your marketing. Give us a call. We can talk about your specific operation. We talk in a lot of generalities here on the show, but really, our focus is on the individual operation. So give us a call. We can bounce some ideas and see if there's a fit there for your operation. Also appreciate everybody that tunes in on a daily basis. Go ahead and throw us a like or subscribe. It'll keep you up to speed on everything that's going on with AgYield in terms of our shows and any any specials that we put out there as well. So again, thanks to everybody who supports the show. Give one quick rundown here before we wrap. March corn up a penny and 3/4, 4.90.5 is the last. March soybeans down a penny and 3/4 at 10.56.5. And March Chicago wheat's down 5 3/4 at 5.61 3/4. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.